Hello and good day. How are you doing, traders? When I'm doing this video, I think 1.5 hour left for to open the market for this week. So please bear with me. The thing I would like to recap here for the new year that gold is currently in a range here. 1 2 3 4 1 2 3 4 5 6 7 8 9 10 months it is moving in this range, and we have a triple top here. And last May gold made a record high price of 2080 85 86 something like that, and this top created this bottom, and the bottom ended on 1811. Now last month on October, due to 7th October, the fight or war between Hamas and Israel, Palestine and Israel has made this, created too much uncertainty in the economy, and this basic fundamental change has pushed the price this high in October. This month the market opened with a gap, without any gap, and it started pushing the price above, but it failed the previous top of the last month. Then the seller took control and pushed it back to 1926, this level, and again the buyer took control now, and the price is here. So as far as this candle is concerned, still we have 10 days to go to see what is going to happen in the next 10 days, so we can understand if we have a double top here, or if it becomes a green candle, depending on that. There is nothing much information here left, only to show you guys that there are two areas we are concentrating here. One is this big area, big ranging area, which is ranging from 2020, and the top is here, the bottom is here, and the middle of this range is this dotted line. And if we think about this big range, then you can see that the price is honoring this dotted line, the middle line. So it went bullish, and then it became bearish, and it came to 50% of the total bullish, and then again it 50% of the total bullish range, it was bearish. Now it has starting to be bullish again. And again, when we see this small range of this last 9 months, this is the double bottom. So this double bottom has created this thing, and this range has the middle line. Middle range is this one. This is the middle price of this current small range for the last 9 months. So we keep it like this because we need to see that where in terms of monthly time frame the price is moving on. Let's move back to weekly now. In week, it is very clear that we don't have any double top. You see, there is no double top, and this is the monthly double bottom. So even if we consider a double, try to find out the weekly double bottom, there is no sense, because always if we have double bottom or double top in different time frame, then we always count on the higher time frame. So in week, we see that last three, this was the last week, which is a piercing line, and it's a very good momentum bullish candle, but it is not engulfed. It tried to engulf. If we enlarge it, we can see it tried to engulf, but it failed and pushed down by the seller to this level. So this is the weekly scenario. So in weekly scenario, we can see that the seller has a certain but limited control over the market at the moment. Let's get back to day time frame. In day time frame, we don't know why this double bottom has been made, why the price has been rejected from here to go bearish more. So we have to find that out. Then it started moving on in day, and we see this it has been rejected from here. Now there is nothing for reference at the moment to see. Actually these are from very lower time frame, so I should have removed this, so you can see things that there is nothing actually in the time frame which can be used as a reference for double top and double bottom. So there is no double bottom. We can see that this, we need a shadow to have a double bottom. We don't have that. A little bit we can see here in the, if we see it very big, let me see. Yes, we may call this a double bottom here in the time frame if we want to. Then let's do it. Let's see. But always see, we have to take this one, because this predominantly this candle, we have to take the highest price to visualize the thing. So this is the thing in the time frame, and this is the double top we have already made officially, and the range will be up to this. This is our range. So this is the double top has formed, and price has been rejected and pushed down to this level again. Now before we make any measurement, we have to find this bottom, why this bottom has been created. Otherwise we have to take the measurement from here. So I want to see what, as price has been rejected from here by so let's see if we can find anything here. So let's go to 4 hours. In 4 hours, before we try to find that bottom, I have already found it, but I will describe you later. Let's go get on what I have explained last week, that the price was here, it can go high, so it went high, it reacted down, again it went high, reacted, and here the price has a reaction in this zone, which is very clearly I mentioned. Again the price will react on this zone. You see it has been reacted, and the price failed to move upward. This thing has resisted the price very badly. So this was the last week analysis I have put here, and on the flip side I said if the price break this line, then it will move downward. So I am going to move the previous weekly analysis now. If you can see, there's in daytime it has, the price has been rejected from here. So why not we mark it and see where we can see any reference of why price has been rejected from here, being more bearish. Okay, so let's get back to 4 hours. In 4 hours we can see there is no reference, because this is a green candle and it has the body here. We need shadow. So moving to different time frame, I found in 30 minutes it is not even available. Can you see, guys? Nothing is available. So I moved down to 15 minutes, and in 15 minutes still there is nothing I have found. Nothing I have found, but what I have found, this red candle. This red candle is opposite in color in a bullish trend, and this caused all the trouble for us or for the market. This 15 minutes candle was powerful enough to create this this guy. Where is it? Where is this? This is the guy. Can you see, guys? This 15 minutes red candle has stopped the price going further bearish, and that is the biggest thing, and was very tough for me to find this thing out, to be honest with you. And anyhow, I have found it. And this 15 minutes candle, if we go to 4 hours now, you can see that 15 minutes candle has resisted this here, or in day time frame we marked it with black. Let me make it available in hours and minutes. Okay, so if you go back to 4 hours, this zone has been, the price has been rejected from here to move upward, rather pushing it more bearish, is controlled by that 15 minutes, that particular candle. You see, this is the candle. It has been resisted by this single guy, a 15 minutes candle, which is opposite in color of its trend, as this trend was bullish, and it was opposite in color. So this is the guy which hold back the whole thing here, this guy. So coming back to 4 hours, now we have a range, very clear. We have a range here, and we need to see, if we want to see, we have to enlarge these things a lot. So let's get back to our current price level. This is our current price. So now we have a double top in there, and we have a double bottom from here. So if we measure the total range now, this is our range from here to here, and this is 50%. So already the 50% has been marked here with this black, with a zone of this opposite color candle. This is a bearish trend, and there is opposite color candle here that resisted, created this price reaction. So if we now bring it somewhere and delete it, that we put, where is our exact 50%? Let's mark it. This is our 50%, and this 50% is based on what? This 50% is based on our current daily double top. So one way or the other, the price has to come back here. This is my way of thinking, which is 166. However, we can see that there is nothing very much evidently presentable here. So my way of thinking, the price will come back here, retest, come back here, and sweep all this liquidity. It will take out the liquidity from here, to be honest with you. Then it will move here, retest this area and move. Maybe move here, retest, and move upward to this zone, this upper zone. And this is one thing in my mind at the moment that can happen with gold. So my way of taking trade here should be, if gold comes down to 1955, I will put a trade for go long 1953, and my stop loss should be somewhere this place. It's little bit, can I see it properly? Hold on. So market will be like this, but our trade will be somewhere here, to be honest with you, somewhere here. So people will come give a long here, but we will go for the here where the people will put their stop loss here. So I'll go long. Hold on. Go long, something like 195.200. The stop loss should be 1948.00. Take profit will be, if we consider take profit, we will first target here this half 1185. TP1 should be 185, and TP2 should be, I will expect a half of it also, 2000. Let's put 2000. TP2 should be something like 2000 or 199, to be a little bit conservative. 199. So this is the trade I have for gold. On the flip side, what happens now, that if golds break down this area, this area, that is the thing. If golds break down beyond this area, then gold will come down more. So you have to wait to see the reaction from here. And another option I am thinking at the moment is that these are 4 hours candlestick. So if you move to daytime, you can see there is a big shadow of this red candlestick of the previous week. This guy, and this is making me worried that price should come here before it starts getting some fuel, taking out the liquidity from here to move upward. But to break this structure, it needs to come here if it wants to be bearish. Beyond this, everything is bullish bias, and if it breaks down here, then we may have a bearish trade, but I don't recommend at the moment. It is too deep at the moment, so far I understand, because it has just started to move on. So let's see what happens next week. Don't go long before the price comes down to this place, because it will come and retest, because we have a very big fair value gap here. If you see this, a big fair value gap has been left here. Big fair value gap has been left here. So all this fair value gap needs to be addressed, and that's why I think the market failed to move upward for this fair value gap. It needs to be mitigated. Another option I can see is that the market may, I'm not sure, but market may, it will be a little bit risk taking, come here, retest this area, and the market will move here. This 50% is very important. And any short trade, I will not go for the short trade at the moment, because gold is a little bit more sensitive to be respond with the fundamentals. Any slight change in news of war or political crisis should the golds like anything towards being severely bullish. If you can see, if we go today time period, you see the candlestick is so big here. This candlestick was on 14th, but this guy is on 13th. So the 7th the news came out on 7th. Can you see here? And this is 13th of October. If you go to here, 6th, this is 7th, and just the when the news matured, and it just jumped like anything. So a lot of fair value gap also have been left here. So I will prefer to go long if it comes down to this zone or this zone, but I will not go for short at the moment. Thank you very much. I hope you enjoy the video. I try to explain with a lot of technicals thing. Hope things are more clear. If you find anything which is not clear, please put it in the comment section so I can respond to that. Thank you very much. Take care. Bye bye.